stop what you're doing. Seriously, if you own Perdoceo stock or if you're just hunting for hidden gems in the market right now, you absolutely need to see this fundamental breakdown. Now look, I know most retail investors are terrified of the for-profit education sector. It's a common fear, right? People think it's a completely dead market, literally filled with regulatory landmines just waiting to blow up your portfolio. And honestly, I get it. But last week, I ran Perdoceo Education Corporation, ticker symbol PRDO, through 5 distinct valuation models, plus Warren Buffett's and Peter Lynch's ultimate investment checklists. And guys, what I found actually shocked me. What if I told you this specific company just posted a massive 30.8% jump in earnings per share? It's like finding a cash-generating diamond hidden right in the middle of a regulatory minefield. So that begs the bold question, is Perdoceo a brilliant contrarian buy, or is it just a classic value trap waiting to spring on unsuspecting investors? Today, we are explicitly skipping all the flashy finance gimmicks. We don't do that here. Instead, we're looking at hard data. I'm going to take you through their latest 10K and Q1 earnings using a strict, completely objective analysis. And I promise you this, by the end of this explainer, you will have a clear, actionable framework for exactly what is driving this company's valuation. You'll know exactly if PRDO is a Buffett buy or a Lynch trap. We've got a lot of ground to cover, and the numbers are absolutely fascinating, so let's jump right in. All right, here is our roadmap for today. 1. Inside Perdoceo Education Corp. 2. Unpacking Q1 2026 earnings. 3. Tech and corporate partnerships. 4. Dividends and shareholder returns. 5. Regulatory headwinds and risks. And finally, 6. The future outlook. Let's get to it. Section 1. Inside Perdoceo Education Corp. So who do you think is actually driving the adult education boom right now? It's really easy to assume it's just 18-year-olds fresh out of high school, right? Well, actually, scratch that. The data tells a completely different story. An unbelievable 68% of Perdoceo students are over the age of 30. This makes them a completely dominant player in serving non-traditional learners. Folks who are out there trying to juggle their careers, their families, and their education all at the same time. To serve this specific demographic, the company operates 3 distinct accredited academic institutions. We've got Colorado Technical University, the American Intercontinental University System, and the recently acquired University of St. Augustine for Health Sciences. Across these 3 institutions, they're serving over 44,000 students. And get this, remarkably, about 91% of these students are enrolled in fully online academic programs. And here is exactly what these non-traditional students are studying. We see a massive 66% concentration in business studies, but you definitely want to pay attention to that 22% in health education. With their recent acquisition of USAHS, Perdoceo is rapidly expanding into graduate health sciences. Think physical and occupational therapy. These are absolutely critical, high-demand fields. And then information technology rounds out the whole shebang at 12%. Section 2. Unpacking Q1 2026 earnings. Now, what is really interesting about this number, 85 cents? Well, Q1 2026 diluted earnings per share hit exactly 85 cents. And that is so important because it represents a massive 30.8% jump from the exact same quarter in the previous year. They absolutely crushed expectations here, proving that their current operational model isn't just working, it's highly profitable. Breaking the exact metrics down, we see revenue grew a very solid 4.1% to $221.7 million. But the real story here is the efficiency. Just look at the net income. It skyrocketed by 23.5% to $54 million. So how did they achieve this outsized profit growth relative to their revenue? Well, according to their filings, it was largely driven by lower bad debt, reduced depreciation, and an incredibly disciplined approach to expense management that drastically improved their operating margins. Section 3. Tech and corporate partnerships. Now here's a crucial takeaway. Perdoceo isn't just a traditional university operating on the internet. They are effectively an ed tech company. They've been early adopters of generative AI chatbots powered by large language models to handle student queries instantly. On top of that, their IntelliPath personalized learning platform actually adapts course material to individual learning styles. This technological edge is directly linked to their ability to retain those non-traditional adult students we talked about earlier. But tech is really only half the catalyst. The other half is how they actually recruit. If we contrast traditional student enrollment with their corporate partnerships, the difference is night and day. Corporate students are employer-supported learners who actually receive tuition assistance. Crucially, these corporate students now make up an incredible 38.3% of CTU's total student base. They cost far less to recruit, and most importantly, they graduate with little to absolutely zero student debt. That is a real game changer. Section 4. Dividends and shareholder returns. Over the last half-decade, Perdoceo has managed a remarkably strong cumulative total return compared to the broader S&P 500 and even against a heavily weighted peer index of other for-profit education providers. While this sector has absolutely seen its ups and downs, their market position remains incredibly resilient. And returning value to shareholders requires cold, hard cash. While Perdoceo is currently sitting on an absolute war chest of approximately $680 million in cash and cash equivalents, that ensures incredibly strong liquidity. It gives them the ultimate flexibility to invest in organic projects, update their tech infrastructure, and, critically, reward their shareholders without taking on dangerous levels of leverage. Because of that huge cash pile, they offer a very reliable dividend timeline. They've been consistently paying out 15 cents per share on a quarterly basis. And on top of this steady dividend yield, the board of directors recently authorized a brand new $100 million share repurchase program on the open market, meaning they're actively buying back their own stock through June of 2027. Section 5. Regulatory headwinds and risks. Okay, let's pivot to the bear case, because to understand this sector, we have to clearly define the most critical terms: Title IV programs and the 90-10 rule. Title IV refers to federal student aid programs. The 90-10 rule legally mandates that these institutions must get at least 10% of their revenue from non-federal sources. An over-reliance on federal funding is literally an existential risk here. If they breach this threshold or lose Title IV eligibility, their entire business model essentially collapses. Beyond the 90-10 rule, their 10K clearly outlines several other major external pressures. They're constantly having to navigate strict gainful employment regulations, which essentially measure debt-to-earnings ratios for their graduates. They're also highly vulnerable to shifting political environments in Washington, new accountability measures stemming from the recent Reconciliation Act, and, of course, the ever-present risk of rising cohort default rates as federal student loan repayments resume. Section 6. The future outlook. Despite those intense regulatory risks, management is actually highly optimistic right now. Following that strong Q1, they actually raised their full-year 2026 guidance. They are now projecting an adjusted EPS somewhere between $3.05 and $3.16, and they anticipate year-over-year revenue growth in every single remaining quarter. They firmly believe their ongoing investments in student retention and those corporate partnerships will just continue to pay off. Which leaves us with the ultimate question. With tremendous cash flow and profitability on one side, battling intense, ongoing regulatory scrutiny on the other, will Perdoceo's early investments in AI and those brilliant corporate partnerships be enough to sustain this impressive growth long-term? That is the core tension at the heart of PRDO, and it's exactly what you need to be tracking in the coming quarters. Thanks so much for watching this explainer.